he was actually the person that gave Anthony Scaramucci his first ever job in financial services back in the mid-'80s. And legend has it that he made Anthony wait for 6 hours for the interview. But obviously it went well, and the rest is history. So I would like to welcome a very dear friend of Anthony Scaramucci and the SALT Conference, David Darst, who is the Chief Executive Officer of Petiole Asset Management and also Senior Investment Advisor to the Family Office. Please welcome David to the stage.
Ladies and gentlemen, good afternoon. I want to respectfully dedicate these brief words and remarks to Paul Volcker, who just passed away, as you know, age 92. He is the man who took care of the United States and the U.S. dollar after the dollar was delinked from gold on August 15th, 1971 by Richard Nixon. He was the person who broke the back of inflation. As you know, he served from 1979 to 1987 as chairman of the Federal Reserve Board. And thirdly, he helped to repatriate some of the assets that were taken from Holocaust victims. So may he rest in peace. I also want to dedicate these words to His Royal Highness Crown Prince Mohammed bin Zayed, and for his leadership and inspiration to us all. Let me start by hitting some of the themes. Paul Cabot ran Harvard's endowment. He made Harvard's endowment increase 7 times. He was chairman and he was treasurer of Harvard University's endowment. And when he took over the endowment, it was 100% in bonds. And he managed to persuade Harvard to go into equities starting in 1949 before one of the great bull markets, the 1950s, in which stock market tripled. He managed to increase the endowment 7 times. And Mr. Cabot said, he was one of the great asset allocators, you need to get the facts and face the facts. Ladies and gentlemen, all of us are surrounded by facts now. We have Refinitiv. We have Bloomberg. We have FactSet. Facts are coming in. CNBC, Bloomberg. All of these facts are coming in like crazy. But most importantly, we need to face the facts. That everybody gets the facts. We need to face the facts. And to face the facts, we have low and high. We have low yields and high debt. We have low trust in institutions and high dissatisfaction with institutions. These are part of the background that we're facing. Now, first of all, I want to hit some themes, but I want to also recognize the Financial Times of a couple of days ago talked about Khaldoon al-Mubarak, his leadership of Manchester United. And basically, you know, the investment was made by Abu Dhabi in Manchester United, $150 million in 2008. Recently, Silver Lake bought a share of it, which valued it at $4.8 billion. That's 11 years. And so we sit here thinking about investing. That's a 30% compound return over 11 years. Congratulations to Abu Dhabi. First theme, Russia, China, India are rising, and it's a multipolar world. We have to keep this in mind as we invest. Secondly, we are engaged, ladies and gentlemen, whether you like it or not, in a trade war. We hope it does not become a currency war. We're also in an intellectual property war in which we're trying to protect and guard against the theft of intellectual property, cyber currency war, Facebook, Twitter, TikTok war, in which people are manipulating investor and electoral thinking. We are in a war of respect and a war of influence. And finally, get ready. All of us must get ready to see more conflict in outer space as we will begin to see, I think, people start to mess with other people's global positioning systems. The next theme is populism. Populism means dissatisfaction. The internet has raised people's knowledge. The internet has raised people's aspirations, its wants, and its power to exercise their dissatisfaction. Good example, look at Hong Kong. We've also had demonstrations in Lebanon, Iraq, Iran, Catalonia, Bolivia, Chile. So basically, these things could not have happened without this, without the mobile internet today. The world has never been better off today than it is today. Never been better off. We have poverty is down, disease is down, middle class is up, access to water is up, access to electricity is up, access to connectivity is up. Yet people feel disillusioned, distanced, and disenfranchised. So this is an amazing thing to me, how well the world is doing and how poorly many people in the world feel about how they're doing. The next theme is the growth of 5G. This is something we need to get ready for. 1996 was the beginning of the internet web browser with Netscape and Microsoft Explorer. Made it possible to go around the internet. 1996. 2006 was the smartphone. This is Apple and Samsung. And now, 2016 was the beginning of 5G, which is now coming. 5G is not only about connectivity. It is not only about speed. It is about blockchain is going to be coming in. Internet of Things, machine learning, driverless cars, online video game, okay? And, of course, Netflix, the streaming of movies. Disney was $112 a share when they took over the remainder of Hulu that they did not own. Now Disney owns Hulu, and you see Disney goes up to $142 a share, mainly on the strength not only of the Frozen movies, but on the strength of its streaming franchise, which they've priced at half price of Netflix. Our children and our grandchildren are entering a major ocean of possibility and opportunity. It's phenomenal what they're going to experience. However, we must give them safe harbors and anchors of faith, family, and fun. Faith, family, fun. We must give them those 3 F's. Big data. Big data is not useful unless it's clean, unless it's safe, and unless it's secure. Apple's market cap, ladies and gentlemen, is $1.1 trillion. Apple is equal in market capitalization to the entire energy sector of the United States. All of the oil companies, Exxon, Chevron, ConocoPhillips, all of them combined are not equal to one Apple. But if you took Apple away, if we took Apple away, we could go to Samsung tomorrow. So what? If you take Exxon and Royal Dutch and British Petroleum away, the world would be on its knees. And so this is a major mismatch. Oil has been tobaccofied. And by that I mean the University of California system. That's University of California, Berkeley, Los Angeles, Santa Cruz, Santa Barbara. University of California, Berkeley has a $17 billion endowment, and they have a $70 billion pension fund for all of their employees. 1 month ago, they elected to take all of their assets out of energy stocks, out of hydrocarbon stocks. So oil and gas companies, no more in the university. So basically, you've seen oil get tobaccofied. And with electric vehicles, people are beginning to put pressure on endowments to reduce or eliminate their exposure. There is a backlash. It started. A backlash coming. Get ready for this. Against big technology. Not against oil. Against big technology. These are social media companies. These are internet search companies that are felt to have too dominant a position. And I remind you, May 15th, 1911, the Supreme Court of the United States made John Davison Rockefeller split up the Standard Oil Company into 7 companies. And so get yourself ready for some backlash to happen on some of these very, very dominant market positions. Another theme is artificial intelligence. Artificial intelligence has the ability to enhance our lives and the ability to degrade and diminish our lives. Artificial intelligence cuts jobs while virtual reality fits time. So people lose their jobs and now they can go and into this different world of virtual reality. Drones. The Federal Aviation Association, FAA, drones, there's 1.3 million drones registered in the United States now. 1.3 million drones, which is 3 times what it was in 2016 when they began to require people to register it. June 20th, many of the people in this room remember, June 20th, a drone was shot down over the Strait of Hormuz, and the instruction to shoot it down was given from Las Vegas, Nevada, at Creech Air Force Base. Go on their website, and you will see these gentlemen operate the drones that are here from Las Vegas. The next theme is demographics. We have people living longer. We have Africa is going to add, and India to the world. Over 40 years, Africa is going to add 1.1 billion people, and 10 Southeast Asian nations. I'm talking about Philippines. I'm talking about Vietnam, okay? They're going to add another China. Immigration flows south to north. People going from Mexico into the United States. People going from Africa. People going from the Middle East into Europe. Immigration flows, and people basically, there's big pressure on pension and healthcare systems by this. That's one of the big pressures. And people are basically subordinated debt holders of governments today for pension and healthcare. The next theme is algorithm-driven high-frequency trading. Individuals only represent buying a stock of Johnson & Johnson, buying a stock of Procter & Gamble. Individuals today represent only 8% of trading. Trading is dominated by quantum investing. And it's funny to me, in the old days of Maria Bartiromo, when she started 25 years ago, the CNBC was very happy to be on the New York Stock Exchange. Today, the New York Stock Exchange is very happy to be on CNBC because there's only 8% of the individual investor of the trading is conventional individual investor trading. The next theme is active management. Through 2018, active managers have underperformed their passive benchmarks for the 9th year in a row. 9 years in a row, active managers have underperformed their benchmarks. Mohamed El-Arian has talked about liquidity. There's 2 kinds of liquidity. There's systemic liquidity and there's trading market liquidity. Systemic liquidity, there's too much liquidity. That's what's driven asset prices so high and made expected returns so low. That's what made bond prices so high. Bond prices are in a euphoric stage. Bond prices are higher today than internet stocks were in 1999 before the dot-com crash. The next theme is the trillions government bonds with negative yields. So all of these things, demographics, algorithmic trading, negative yields, have driven people to try to match their assets and liabilities. Pension funds, insurance companies have driven people to match their assets and liabilities with private equity, private real estate, and private credit. Private credit. People are searching for yield, and this is really one of the themes that we want to bring to you. You have to be very selective in choosing managers. The difference between a 75th percentile, 25th percentile is so great when you get into private equity, when you get into venture capital, when you get into private credit, when you get to private real estate. I think energy stocks, Royal Dutch and British Petroleum today yield 7%. Chevron, 4%. ExxonMobil, 5%. Shouldn't you consider some energy stocks as bond substitutes? Don't come to me and tell me you have a diversified portfolio when you have technology stocks here and you have bonds over here to hedge them. Bonds are at high price. Technology stocks are at high price. So that's what's driven people to want to have private equity, private credit, and private real estate. Ladies and gentlemen, thank you for listening.